Hello, this is YourStockAlert.com here today to bring you a video chart of SPPH, Spencer Pharmaceutical Inc. One of the first things we're going to notice about SPPH is that it recently had a huge run-up. This run-up started at 0.21 cents and peaked at 0.64 cents just about 3 weeks ago. We're counting this consolidation here. As you can see, since then the stock has decided to cool off, as usually happens with these type of powerful moves, and we've been not necessarily free falling, but we have been retracing ever since. As you can see by this line. Good thing about this retrace is while we did lose a lot of points during the retrace, it wasn't drastic all at once, so there were no huge red candlesticks, as we can see here. That was a drop from what, 9.99 cents to a little bit over about 0.30. That's the kind of drop that really hurts in one day. As we can see here, previous traders had plenty of opportunity to sell during the highs, and the second that red candle day they had an opportunity to escape around 0.50, which still would have, let's see if we can show this easier. They still had chances to escape around 0.50, which, as we can see here, would have still allowed them to keep some of their gains if they jumped in between the first and second day. The interesting thing here, however, is that right now we've pulled back to a support area, as we can see, at the 0.20 line, and this line is exactly where the run started before, which means that the stock has recharged. And judging by this doji we see here, let's show you the exact candlestick I'm talking about. This doji here, we can see that traders are a bit uncertain, and the bears are no longer able to push the stock down. The bulls have decided to start buying at this support level, which once again can be seen here, and now a period of consolidation is expected to begin. Point 20 will be our first line of support, as it's what's holding up the stock now, and as for second line of support, we are going to find one directly at 0.15. However, given the pattern, we at YourStockAlert.com believe that 0.20 should hold unless negative news comes out about the stock, which is unlikely. In fact, we're starting to hear buyout rumors. Just note those are just rumors, but it is being talked about right now. From all the information that can be gathered, the street's opinion, well, the penny street's opinion on this particular OTC seems to be positive for the very short term. As always with OTC stocks, calling the mid to long term is pretty hard, so pretty much most predictions are based on the very short term. Looking at resistance levels, there's two that we have to worry about, which are the previous highs here at 0.60. While we did hit 0.64, the ceiling will most likely happen around 0.58 to 0.59. Simply because once traders realize that they're starting to hit resistance, they're most likely stop buying, or selling might persist unless particularly good news or a particularly large buyer enters the scene. So this is going to be our first resistance, which is going to be the heaviest. And of course we have this previous resistance at 0.99, which for all intents and purposes will be change it back to green. will be $1 or 1.00. However, we weren't able to reach this level of old resistance here on the last run up from 0.21. So as for now, the chances of us hitting $1 or more on simply technical trading is pretty rare at the moment. Now, potentially if larger news such as an FDA approval or a positive trial were to hit, that level, that 1.00 level, has a much higher chance of being broken. But as always, when we trade pharmaceutical companies, we simply go by the text until a particular FDA event or a particular particular testing shows us abnormally positive or negative reviews. Let's look at some other technical indicators. We're going to look at the ADX. As we see, we have an ADX of 29, which means anything above 20 is considered a small trend. Anything above 30 is considered a more solid trend, of course, and anything below 20 is considered not to be a trend at all. So we can see here the negative DI, which represents bearish momentum, is above the positive DI, which is represented by the green line, which represents bullish momentum. This is to be expected after this, let's see, 1, 2, 3, 4, 5, 6, about 7 days of selling off. So that's to be expected. The good news is that both of the positive and negative DI have not diverged very far away from each other, which means that the chances of the positive DI being able to cross back over the negative DI is pretty high. Converging, of course, being the coming together, and the opposite being diverging, being going apart, which can be seen here. Diverging, usually means that one of the bulls or the bears are starting to gain momentum, and as we can see here, bearish momentum was actually growing in power. Another thing we're going to look at is the accumulation and distribution indicator. As we can see, during this sell-off, this indicator has started to dip as well, as investors that were not, or traders that were not fortunate enough to sell during the peak, slowly sold stock day after day to escape. However, it's important to note just why looking at the charts is so important, because we notice these patterns, that the accumulation distribution line has actually hit a support line here, and its slope has started to form more of a line than a straight down pattern. As we can see, it's been the word escapes me, but it's been slowly reducing the speed in which it falls. It is the opinion of YourStockAlert.com that the stock is pulling back properly and following the rules of technical analysis. We believe that SPPH will more than likely enter a period of consolidation, and after that period of consolidation, the chance of another uptrend seems higher than the chance of another downtrend. We're currently at support, and investors are waiting for SPPH to begin to bounce. As always, please fulfill your full and complete your full due diligence and manage your trade properly. Pick your entry and exit points before the trade. And as always, remember, OTC traders are not gamblers. They simply diagnose what's going on in a moving stock. So as always, diagnose, and once the trade is no longer going your way, make sure to have a plan to exit that trade relatively unscathed. This is your Stock Alert signing out. Good luck, traders.